Welcome back. This is Tony from Queensland Property Intelligence. In our previous video, we explored a simple but important question. Is Queensland's property market facing risk or opportunity in 2026? But today, we want to ask a different question. Instead of focusing on short-term price movement, is Brisbane into a structural phase of growth? Because when a city began discussing the shift from expanding outwards to building upwards, it often signals something deeper. It suggests that land, the most fundamental resource in real estate, is becoming truly scarce. Recent discussions around Brisbane urban planning highlight a significant transition. According to various housing projections, by 2046, Brisbane may require over 210,000 additional homes. At the same time, population growth remains steady. On average, the city adds roughly 600 new residents each week. Yet housing supply, partially low to medium density housing, has not kept pace with demand. When city begins reviewing zoning limits and encouraging higher density development, it is really about reducing property prices. More often, it is about managing long-term supply pressure. To understand what may be happening in Brisbane, we need to look beyond headlines. Property markets are shaped by a combination of structural forces: population growth, land availability, construction capacity, and planning policy. When demand rises steadily, while supply remains constrained, a structural imbalance begins to form. In such environment, property markets rarely have like short-term speculative cycles. Instead, that gradually evolve into structural markets, where supply limitations play a large role in price stability. A common assumption in property discussion is that interest rates alone determine market direction. Higher rates means falling prices. Lower rates means rising prices. But historically, interest rates tend to influence timing rather than long-term structure. Major housing downturns are typically associated with excessive construction and oversupply. Without that imbalance, interest rate increase often slow transaction activity, rather than trigger widespread price collapse. For example, research firm SQM Research recently released a scenario outlook for 2026. Their baseline modeling suggests Brisbane property prices could move from up 10% to 15% range. Under more favorable economic conditions, the upper bound could approach 18%. But it's important to emphasize these numbers are scenario range, not guarantees. The key takeaway is not the percentage itself. The key takeaway is that current structure indicators do not strongly support a deep systematic decline. As cities mature, housing markets rarely move uniformly. Instead, they begin to diverge. Some segments remain resilient. Others face pressure from new supply. At the same time, rising price therefore can trigger structural migration. Three patterns often merge. First, density migration as inner city area move towards higher density housing. Second, affordability migration as demand gradually expands into new locations. And third, population redistribution as households adapt to changing economic conditions. These transactions are not short-term fluctuations. They are part of how cities evolve. At Queensland Property Intelligence, our focus is not on predicting short-term price movement. Instead, we examine the structural forces that shape property markets. Because price is often the outcome, structure is the cause. And when structural conditions remain stable, market trends rarely reverse suddenly. Understanding these structural dynamics can provide a clear perspective on how city growth. And once again, this is Tony. At Queensland Property Intelligence, our goal is not amplify market noise. Instead, we focus on the deeper forces that influence property markets: population growth, land supply, construction capacity, and policy direction. When you start analyzing these structural drivers, many markets movements begin to make much more sense. In our next episode, we will explore an important question. As price there holds rise in Brisbane, where may the next structural opportunity emerge? This is Queensland Property Intelligence, data over noise. See you next time.